Hello, and welcome to Part 2 of this broadcast on account access and financial education for youth participating in employment programs hosted by the National Credit Union Administration and Federal Deposit Insurance Corporation. Helping young people build and create financial stability requires a team of community partners. We recognize the workforce programs, financial institutions, and other stakeholders from across the country who have joined us today to learn more, hear more, and take action to improve the financial capability of America's youth. I'm Natasha McAdoo, Financial Literacy and Outreach Specialist with the Ncua's Office of Consumer Financial Protection. I will be your moderator for this broadcast, along with my colleague, Tracy Morris, Senior Community Affairs Specialist with the FDIC's Division of Depositor and Consumer Protection. Before we begin, please follow along as I review the information on your screen for the best viewing experience. Please adjust the volume on your computer so that you can hear the webinar clearly. To increase the size of your slides, drag the bottom right corner of the presentation viewer. Please allow pop-ups from this site for it to function properly. Download the presentation by clicking on the PDF file under the Resource widget. Use the Ask a Question feature on the left side of your console at any time in order to ask a question. We will address these questions at the end of the webinar. This webinar will be closed captioned and available for on-demand viewing on ncua.gov in approximately 3 weeks. A quick reminder, the views and opinions expressed during this broadcast are those of the presenters and do not reflect the official views of, nor should be considered an endorsement by, the National Credit Union Administration, nor the FDIC's Board of Directors, its management, or staff. The FDIC and Ncua have partnered on many initiatives geared at improving the financial capability of young people across the country. We have placed a special focus on promoting ways young people can gain access to federally insured credit union and bank accounts, accompanied with financial education. Now, Tracy Morris will provide an overview of what we plan to cover on this broadcast. Tracy?
Thank you, Natasha. The FDIC is pleased to co-host this webinar and welcome the participants for joining today. This is the second webinar we've co-hosted highlighting combining youth employment opportunities with financial education and account access. We have an exciting lineup of speakers today. First, Matthew Ballaras, Director of the Ncua's Office of Consumer Financial Protection, will discuss the Ncua's commitment to financial education and its support of youth account access and inclusion. Dr. Kelly Tenner will provide an overview of the Careeronestop website that is managed by the state of Minnesota through a grant from the U.S. Department of Labor. Margaret Libby, the Chief Executive Officer of MyPath and a program partner, will discuss the importance of youth account access. Afterwards, Ms. Libby will be joined by 2 youth leaders who will talk about their relationships with financial institutions. Then Luke Reynolds, Chief of Outreach and Program Development with the FDIC, will discuss the FDIC's commitment to financial inclusion. Finally, Natasha and I will highlight our agency's resources as well as others which support youth financial capability. Thank you for joining us today, and I hope this webinar will provide you with the information you need to pursue account access for youth in your communities. Now, I would like to turn the webinar over to Director Ballaras.
Thank you, Tracy, and welcome to our financial institutions and community partners who have joined us on this webinar. This is part 2 of a collaborative series between the Ncua and the FDIC aimed to promote access to financial services for our nation's young people. The Financial Literacy and Education Commission's recent U.S. National Strategy on Financial Literacy indicates financial literacy and education is more effective when it helps develop skills rather than merely transmits facts about financial products and services. Unfortunately, not all youth have a natural network to help develop these skills, and this places them at a disadvantage. Providing young people access to a convenient, safe, youth-friendly account can help them save a significant portion of their pay and provide an opportunity to shape their future financial wellness. Under the Federal Credit Union Act, promoting financial literacy is a core credit union mission. In fact, credit unions are chartered for the very purpose of promoting thrift and responsible credit use to their members in the communities they serve. And credit unions are actively engaged in delivering on this mission. NCUA's credit union profile data indicate the majority of credit union members have access to some form of financial education services through their credit union. Such services include financial counseling, first-time homebuyer programs, and in-school credit union branches. Likewise, credit unions that provide youth savings and share draft accounts typically have youth-friendly account features like direct deposit, no minimum or starting balance, zero or low monthly and minimum balance fees, and no dormancy or inactivity fees. And while credit unions serve the needs of their members and promote financial literacy within the communities they serve, the NCUA, through the Office of Consumer Financial Protection, works to reinforce credit union efforts, raise consumer awareness, and increase access to credit union services. As I close my comments, I would like to thank our distinguished panelists for their devotion in sharing their insights on this important topic. I'd also like to thank our colleagues and partners at the FDIC for co-hosting this broadcast. I'm looking forward to our discussion this afternoon. And Tracy, I'll turn it back over to you.
Thank you, Matt. Next, Dr. Kelly Tenner, the Outreach and Training Manager for Careeronestop, will highlight her resource. Kelly?
Thank you, Tracy. Hello, everybody. I hope you're having a nice afternoon. It's cold where I am in Minnesota, but I don't know where you are. I hope you're a little warmer than me. So today I'm going to talk about Careeronestop.org, which is a national website sponsored by the United States Department of Labor, Employment and Training Administration. The website has been around for well over 20 years. I've been around for about 16 of those, so I've got a pretty good handle on it. So I'm going to share just quickly with you some information that might help you. And the reason why I'm here today is because our resource can be used for you to find people who need your help. And that's what we want to do, is help you help them. So basically, our website is the one-stop source for anything employment, training, or education related for the entire Department of Labor. And this is what our website looks like. So it's organized up top by different headings. You can explore careers, find training, jobs, local help, toolkit, and we also have in the middle of the page specific websites for different users. So there's a youth website, there's an older worker website, entry-level worker website. So just wanting you to be aware that that exists. But the really important thing that I want to share with you all today is our Find Local Help section. So under our Find Local Help section, you can find every American job center in the entire United States. You can find every unemployment office. You can find every workforce development board. You can find every single thing you could possibly imagine to find people who need your help. You can find every youth program, every older worker program, every refugee assistance program. You can find Native American programs. You can find Job Corps centers. You can find apprenticeship offices. And having this information at your fingertips is going to be very important when you're trying to find people to help. So this is what the American Job Center Finder looks like. All you have to do is put in the zip code, and it's going to give you the office, the address, the phone number. It's going to tell you if they have a veterans representative. It's going to tell you if they have a business representative, and it's going to give you all the contact information for that office. Everything is downloadable and easy to print off for you, and great resource for reaching out to local offices, finding out if they have youth groups or some way that you could share your information with the Workforce Development Office. Another resource I want to go over with you quickly is our Employment Recovery Portal. This has recently come out over the last few years in response to the pandemic, and there's information on this website for you to help people get back into a job. I mean, part of your job in helping people with their finances is making sure they have finances, and if they don't have a job, they're probably not going to have them. So you can find information on how to get them unemployment, how to get them on different food programs, how to get them free training at a local office, how they can find a work-from-home job. Anything you can think of, you can find on this website if it's related to employment recovery. So you can link to us if you have computer systems or anything like that, or if you want to put us on a resource page. We have widgets, we have web services. You can actually put an entire job search on your website if you want, and all of this is free. So definitely check that out. And if you want any information at all about us or more resources, we have outreach materials, we have printable resources. Just give us an email and I can help you out with that. Or if you want to look further into the resources and find out what else I can offer you, I'd be more than happy to talk with you. And so at that, I will pass it back to Natasha.
Thank you, Kelly. That was some great information on Career One Stop. I know that there is even a section on there for youth resources as well, for those of you on the call. If you have a question for Dr. Tenner, please type the question into the Ask a Question widget on your webinar console. We will address audience questions towards the end of our broadcast. Now, I'd like to welcome Margaret Libby. Margaret is the founder and Chief Executive Officer of MyPath. MyPath brings nonprofits, municipalities, and financial institutions together to foster economic inclusion. Margaret's full bio, including accomplishments and affiliations, is in the bio widget on your console. However, I cannot pass up the opportunity to mention she was the 2020 recipient of the James Irvine Foundation's Leadership Award in recognition of her impact on improving economic opportunity for California's youth. Congratulations and welcome, Margaret.
Thank you, Natasha. I truly appreciate that warm welcome and the kind words about the work that we've been doing at MyPath, because really that is an award for everybody in the organization. And you'll have a chance to hear from a couple of our youth leaders a little bit later in this portion of the session. I am going to start by first thanking the Fdic and the Ncua for hosting this session and inviting us to participate. This is an issue that is near and dear to our hearts at MyPath, and we're just really honored to be here and have a chance to share our work with everybody that is participating in this session today. I am going to start by introducing MyPath, talking a little bit about the values that have animated the work we've been doing around youth banking and youth financial capability, and then share a little bit about how we go about doing the work, and then do a deeper dive on our youth banking standards, after which you'll have a chance to hear from one of our youth employment partners and really what the work on the ground has looked like in terms of using those standards to provide a financial capability experience to young people in their first jobs locally in San Francisco, and some of the insights and best practices that he has learned from doing that work, and that is Carlos Solis, that you'll be hearing from a little bit later. And as was mentioned, you'll be able to hear from a couple of our youth participants that at the end of the day, really what this experience has been like for them and how it has impacted their lives. So that is what I will be sharing. So I'll first start by talking about the vision and values of MyPath, and I'll share, just because I am talking to an audience of financial institutions, we actually were established as a nonprofit affiliate of a community development credit union. And so really thinking about financial products, combining those with financial education, it's really in our DNA, really thinking about that financial product component of the work that we do. And so we really want to ensure that every young person that is working or earning an income in this country has the opportunity to really make that income the early foundations of wealth building and making sure that they're getting on a path to economic mobility. And so that is really the work, or the vision and the values that animate our work. And we focus really on youth of color from low-income communities, because a lot of times those low-income communities they're growing up in are also financial deserts, or what we call financial deserts. And you can see here in this map, which was developed for us by the Federal Reserve Bank of San Francisco, the concentration of check cashers and payday lenders in the darker color portions of, this is San Francisco. Those are the higher concentration of poverty pockets of the city. So you can see the concentration of payday lenders and check cashers. So really, and actually I'll say, if you look at a similar map that would be looking at race and even a historical redlining map, it would look very similar. And so what's exciting to us about the promise of the kinds of partnerships that we're here to talk about today is that they really can help address the long-standing financial and economic exclusion that has impacted many neighborhoods across the country. And I think, for many of us, that impact has become even more clear in the wake of the pandemic. I think the other thing that the pandemic has made clear is just the importance of having a banking relationship. And, whether it was the stimulus payments at the outset and even the child tax credit payments now, having a bank account, having a banking relationship is just central to participating in the economy. So we really think of banking and access to banking as access to the rails of the economy. And so we are excited to share sort of how we have gone about doing that work to make sure that as youth are earning their first paychecks and really taking that first step into the economy, that it is an experience that also includes banking access. And so the way that we go about doing that work is really with these three core strategies that you see here. It's about designing models that work, designing them in partnership with young people, sort of figuring out what really does work, and then using technology to deliver those models at scale, and then ensuring that we are drawing the lessons and the data and the stories out of that practice to advance policy that will ensure that even more young people have access to these kinds of banking experiences at the outset of their lives. So I'm going to talk a little bit about each of those areas now. So financial capability is really at the core of how we do our design. And you'll see this equation here, which is there's, financial education is essential. We believe personal goal setting is essential. And this additional component of quality financial products is essential really for a financial capability experience. And in our work, historically, it is the most challenging piece to include in local partnerships. And so it's part of the reason we're delighted to be here and share the model, and hope to find, new financial institution partners excited to jump in and form partnerships with local youth employment programs. And this, I'll say this also, it reflects what was said earlier about really the strength of approaches where it's about building skills. And that's really what financial capability is learning and putting what you're learning into practice. And we need those accounts in order for that to really come to life for young people. This is the MyPath savings model, which Carlo will be talking about a little bit more. And you'll see here that it really does, it is driven by two accounts that are non-custodial, a savings and checking account, putting direct deposit in place in the youth employment program so that youth can use auto split that is then driven by a personal savings goal, so that using our technology platform, that goal will split, and whether it's 80-20, 70-30, will be split into those two accounts, and then the peer-based financial education. This is all designed to then be embedded in a youth employment program. I mentioned before the core strategy around delivery and scaling, and so we're using presently this platform, MyPath Money, to put the financial education directly into the hands of young people as they're in their programs. We're building a new platform that will be MyPath, that will be called MyPath Next, but currently we're using this platform as well as the relationships inside the youth employment programs to really make the program work. And then finally, our other core strategy of policy and advocacy is reflected here. We've conducted an evaluation of this model, or I shouldn't say we, it was actually outside researchers that conducted it. And this is our youth leaders engaging in a meeting with then Treasury Secretary Jack Lew around our youth banking standards, which was really an opportunity to share what the youth banking barriers are and how our youth banking standards address them. And I'm going to dive into that a little bit more, as I mentioned earlier. These standards have been developed a few years back with our original credit union partner, our parent organization, and also in partnership with young people to really understand what were the biggest barriers and how could we best address them. And so I'll say we've been using these in partnerships with financial institutions for the last 6 or 7 years, and have there are over 10 financial institutions using them at this point. So that's part of the reason we're excited that there are so many people joining us in this session, is that we need many more partners adopting this approach to providing non-custodial accounts so that we can really meet the need for young people across the country. But I'll say these standards, I'm sure many of you have heard of the FDIC's Safe Account Standards. These are fully aligned with those, and the Bank On 2.0 standards that I'm sure many of you are also familiar with, that really draw on the great work that the FDIC did to create the Safe Account Standards. These are also aligned with those, and then also with the interagency guidance that was issued about 5 or 6 years ago around really encouraging banks and credit unions to provide non-custodial savings accounts to minors. The key differences that I want to highlight are that our standards are about providing these safe quality accounts, but making them non-custodial for minors that are 15, 16, and 17-year-olds, and making sure that it isn't just savings accounts, but also checking accounts, because for so many young people, having that non-custodial transactional account is key. They need to do more than the 6 limit, or the 6 withdrawal limitation on a savings account. And so that is one key difference, is that both accounts are non-custodial for minors. And then the second way that our standards sort of take things a step further is by accepting alternate IDs, because once you have the accounts available for 15, 16, and 17-year-olds, they aren't going to be able to get into them unless there is an alternate ID accepted. And so our standards, in many cases, our partners have accepted a school ID in lieu of what is more typical, the government-issued valid photo ID. And what I'll share there is that to date, there haven't been any issues for any of our partners in doing these two, non-custodial accounts with alternate IDs, and that's really because as long as they are outlining their Know Your Customer or KYC procedures in their CIPs, then it has not been an issue for any of their regulators. And so I think the other thing that I will say before I pass the baton here to Carlo is that there really is no federal law or federal regulation that bars financial institutions from doing these non-custodial accounts. And there's maybe one or two states that have laws that make it a little complicated to do so. But really, there is nothing standing in the way from a regulatory perspective for financial institutions, banks or credit unions, to provide non-custodial accounts to minors and to adjust their KYC process to accept alternate IDs. And so I think Tracy is going to talk about a website resource later in the session, I believe, to kind of reassure the audience on that front. But I think it's really an issue that's in the hands of financial institutions to decide to create an account like this and make it available to young people. And so without further ado, I will pass the baton to Carlo, who is a program director at a nonprofit organization in San Francisco, Enterprise for Youth, that really focuses on providing young people with internships and employment experiences to build their skills, help them earn some money, and then has been partnering with MyPath to deliver MyPath savings to his participants. And so, Carlo, I will pass it to you. Thank you so much.
Thank you, Margaret. Good afternoon to everyone. Greetings from San Francisco. I'm cold here, but I know cold is relative to the person from Minnesota. So my cold is not, I'm not comparing my cold to your cold at all. I'm going to talk about 5 things. And I've been on multiple sides of the process in my time working with MyPath, was working with financial institutions across the country to help them develop products, to help them develop enrollment strategies for young people. And then now in my current position, working as a program director with young people and getting them signed up and hooked up with safe accounts. I'm going to talk about accessibility, establishing clear roles and responsibilities with all the stakeholders, the importance, and I know everybody knows this, of communication, of not only verbal but written communication and agreements, and then the idea of sort of starting small and piloting with a focus on always growing. So the first step is accessibility. And so I think in my experience, the first step has always been being very, very clear on what the products that are going to be offered to the youth are, what those entail. I think one thing that I've learned is many times there are existing products that maybe can be tweaked a little to fit the needs of our youth as opposed to creating something new. I go back to being extremely, extremely clear on the types of identification that are going to be needed for the young people to enroll, and then the enrollment process itself, right? And going over that with stakeholders before we even ever get in front of youth. So thinking about the ins and outs of the product itself, and then also how accessible those products are and what the young people are going to need to access the products. Oftentimes, in my experience, there's a process. I think that there's an element of the FIs working with their compliance folks to make sure there's buy-in. We've had some experiences where folks at the branch level are signing off on stuff, but then when we get further down the process, there's some higher-ups that have to sign off on it, and those can be some barriers and some challenges. So really just being on point and very clear about the product and what the enrollment process is going to look like. I think second, kind of as we are working on those details of the product, is thinking about the enrollment process. Assigning point people on each side, meaning the CBO, the community-based organization that's working with young people, and the financial institution. And I think part of that is also leaning on one another to do what one another are really good at, meaning the collection of paperwork, the completion of applications, the correct completion of applications should reside on the CBO, on the workforce partner. That's what they're strong at. They have those relationships with the young people. And then the FI can focus on, one, accessibility of the product, but also the experience that the young people have when they walk into the door and when they come to sign up, and making sure that there's a point person, because young people are going to have questions that maybe other customers and other members may not have. So really being very clear on who's holding what, who's owning what. I think for the third point, communication is key. So establishing expectations. One thing that we found that really, really worked for us was when beginning pilots with FIs is having very, very clear due dates, very, very clear deadlines, very, very clear expectations. What we did in San Francisco was we had checklists for CBO partners to say, I'm not turning in this application until we've had these 10 things done by the applicant, right? Whether that's the proper identification, making sure that things like maiden name and beneficiary are really explained to the young people, because this is the first time that they've ever had to kind of think about those things. So really leaning into making the process as easy as possible, but as thorough as possible. We don't want to miss anything. And then fourth is really starting small, starting with a small cycle that's really controlled, going back to the idea of really strong deadlines and sort of logistic parameters, and then always going back to stakeholders and saying, how did that work? How can we tweak it? How can we make it better? I think ultimately the goal is that the process and the embrace of young people is at the level where a young person can walk in and everyone at the branch is familiar with the products or familiar with the point person, but that takes time to get to. So really taking your time to build and reflect and always go through what worked and what didn't through each program cycle. I mean, I think that a lot of this stuff is, when saying it now seems like it's common sense, but there are things that get lost in the process with all of the moving parts. And I think that really the clarity around product, the clarity around enrollment process, identifying really, really clear roles and responsibilities and having honest conversations about those, that feeding into just a continuous loop of communication between all stakeholders, and then just reiterating and doing the revisiting the process so that it becomes a seamless experience for the young people, for the FI, and for the CBOs. So I'll leave it at that. Margaret, I don't know if you want to hop back on, if there's anything that you feel I should check in about, but let me know.
Thank you, Carlo. I do have one follow-up question. If you could share, briefly, a profile of a young person that you've seen really get on this pathway to economic mobility, from their original engagement with a non-custodial account through Enterprise. If you could do that briefly, that would be great.
Absolutely, Margaret. I think, and I think that for the FIs on here, what we've seen, and I've seen in up close and personal, is this opportunity to really develop sort of lifelong customers, right? And so young people and the person I'm thinking of, they opened a non-custodial savings account when they were 16 years old. They are now in their early 20s. They have purchased a car. They are accessing other products and other services at their credit union, right? Learning about home ownership, around small business loans, around learning how to invest in a CD. And so the young person I'm thinking about, his name is Kevin. He was an undocumented youth, opened a non-custodial account when he could, and has really grown into his financial awareness and has really leveraged and used all of the opportunities that his credit union has given him. And so I think that there's an ROI that maybe takes a little longer when working with a young person, but that I've seen play out in real time, and is really valuable to the FI and to the young person themselves. So I hope that answered some of that, Margaret. But we're seeing young people, that have graduated our program that are now coming and saying, hey, I'm looking for a car loan, and I'm going through my credit union, and that's been really exciting and has been really fulfilling.
Thank you, Carlo. That is incredibly helpful to just hear, what things look like over time. And I think, that has borne out in data that we have collected from one of our main financial institution partners in San Francisco, that our 83% of young people remain members 2 or 3 years after their initial engagement, and that 43% are taking up other products. And so I do think, to underscore that point, that it may take a little bit more time, but these are folks that have a lifetime of borrowing and, financial milestones ahead of them. And so thank you so much, Carlo. I really appreciate you sharing your perspective. And I am going to share this contact slide in the event that anybody wants to reach out to learn more about the banking standards or any of the other data that we have about the impact of the model, best practices. But I will pause there. I think you're in for a treat now with the opportunity to hear directly from Norel and Laura. So I just really appreciate the opportunity to share our work with you all, and I will pause here and leave it to you, Natasha.
Thank you, Margaret, and thank you, Carlo. I love the partnership that you've built there, and this is great information, and we've heard a lot about how to set this up and the importance, and now we're going to really hear on the why. And we have 2 different panelists joining us today along with Margaret. They are 2 MyPath youth leaders, Laura Tren and Norel Knowles. While planning for this webinar, Tracy and I have had the privilege of meeting these 2 leaders and discovering the impact that MyPath has had on their lives and paths to becoming fully integrated into the financial mainstream. So thank you both for joining us, and thank you for sharing your stories. Remember, audience, to use the Ask a Question widget on the left side of your console. If you have any questions for the panel, we will address those at the end of this panel. And we're going to start by hearing more about the youth leaders' past financial experiences and how they came to MyPath. So let's start with you, Laura.
Hi, everyone. Great to be here. Today I'll be talking about why non-custodial bank accounts are so impactful for a strong banking and savings foundation for youth. So I want to share my personal story. When I was younger, my relatives would always give me good luck money in cash every Lunar New Year as part of Chinese culture. Because I didn't have a bank account, I wasn't able to safely store, save, or manage that money on my own. So as a result, I kept it in an envelope in my closet, but my mom would always try to convince me that burglars could come and take it anytime. So out of fear, I gave it to her for safekeeping, and she put it in her own bank account. Years later, when I needed the money, I asked her for it. She decided that I didn't need it, even though it was my money. It was out of my control, and I felt like I didn't have financial freedom. Because I lacked the $700, I missed out on the middle school graduation trip with my peers to Disneyland, which was an important milestone in my life. 2 years later, however, through MyPath, I was able to get a non-custodial account of my own at the age of 14 and start putting this money in the bank account and build a foundation that provided me the knowledge I have about finances as a college student today. At MyPath, I realized that financial education alone is not enough. Through MyPath, I was able to also receive the proper tools to utilize my financial education, such as having access to split direct deposit to jumpstart my savings account and be on the route to overcome my financial struggles, including supporting my single immigrant mother with buying groceries and paying her phone bill. With MyPath, I had split direct deposit and chose to save 90% of my money for studying abroad. I met that goal. At 15 years old, I had saved over $900, and I was able to use that for my expenses to study abroad in France. I would like to emphasize that non-custodial accounts are particularly important these past years because of the COVID pandemic. People are losing their jobs, including my peers, who depended on their fast food and retail jobs. They were laid off, and they didn't have savings to fall back on when they needed the money to transition from high school to college. Having access to split direct deposit trained me to always set aside a part of my earnings. So my transition was much easier than theirs, and I'm now on track to graduating from UCLA with zero debt. So thank you so much for listening to my story.
Laura, thank you for sharing. It's amazing that you're in a position to graduate debt-free, that you feel that these accounts helped you build that foundation, I guess, with the savings and the credit building. How common would you say it is for young working adults, your peers, to have these type of accounts? When you opened up yours, people around your age, especially before you were 18, how many of your peers had these type of accounts or knew about them?
Great question. Unfortunately, it's not common. There are 20 million youth ages 16 to 24, including me, who are working in the United States, some even earning their first paycheck. So it doesn't make sense to me that youth who are 15 through 17, they're old enough to obtain a work permit, apply to get hired, and earn money. But most don't have access to open their own bank account, with the exception of a few states. But ultimately, it's up to the bank to consider opening non-custodial bank accounts for youth 17 and under.
Okay, great. That is a good point about how you're able to work but not able to actually open an account. Did you have anything else on that, Margaret?
Yeah, I just thank you, Natasha, and thank you, Laura. I just wanted to underscore what Laura is sharing, that it really isn't common, yet, but it really is, not something that is barred in any manner, and that I think, just even the idea that this is the Ncua and Fdic hosting a session around youth account access, I think, hopefully underscores this idea that it really is a decision for financial institutions to make to provide non-custodial accounts. So just wanted to emphasize that point that Laura just made.
Thank you. Now we're going to switch to Norel. How did you come to MyPath, Norel?
I've been a participant for MyPath for like a very long time. I've been a participant for MyPath for a very long time. When I was 19, I was credit invisible because I had no idea about how credit works or how it or even how to start your credit. And also I had anxiety about credit because of like all the negative stories that I've heard. Choosing like what credit products to use was very confusing and scary for me. And I just needed an opportunity to learn about credit. Luckily with MyPath, I got a financial mentor, and eventually we started to look at different credit products, and we narrowed it down to two. So I had two options. When I applied for the first option, it was very confusing because different people were telling me different things. They was telling me that I was able to build my credit through them, but I already need to have a credit history, even though that this was advertised for people that didn't already have credit. Because I had my mentor helped me understand the process of building credit, even though the preconceived notions that I already had, which that experience already enforced. Again, I was lucky to have, my financial mentor that helped me through the enrollment process and helped me get through the anxieties that I already had to deal with, because if it wasn't for that, I would have just given up on credit altogether because of the anxiety that I had around credit. So we decided to go for a second option, which was a fresh start loan, which my mentor had helped me know the ins and outs of the contract, so I was able to explain things in my own words. She taught me about auto pay and how to set that up, and she also taught me to make sure to even keep up with it and making sure that it was working properly. I was able to pay everything I was able to make all my payments on time every time in full for 12 months. And she even shared credit tips and even helped me make a budget for myself designed for me. After the 12 months, I started out with no credit, and then I actually ended up having a credit score of 660, which I'm really happy about. Unfortunately, because of the pandemic, I wasn't able to get a second job, so I wasn't able to continue on my credit journey. But I ended up building a relationship with my financial institution, and I feel I'm comfortable and confident when it comes to coming to my second product.
Great. Thank you, Norel. You brought up a good point about being credit invisible. And I think starting off, especially even if you're 18 and not having any credit or any assistance or support to be able to build that credit is definitely an obstacle. Thank you for sharing your story as well. How common do you think it is for young people your age to find credit confusing or not know a lot about it and have a hard time finding resources?
It is really common, actually. In 2015, the CFPB did a Credit Invisible report, and it said that 64 to 67 of all consumers through the age of 18 and 19 are actually credit invisible. I could only imagine that being increased now because, the state of the pandemic. Having a financial mentor helped me personally because, helped me shop for credit products and how to use it. And also, most importantly, it granted me access to my credit report, which I didn't even know how to get by myself. When it comes to access about credit reports and stuff like that, undocumented people, especially undocumented young adults, have the hardest time to get access to things like credit or even establishing credit.
Great, yeah. So we have a lot of credit unions and bank representatives listening who've heard your stories and the impact of non-custodial accounts or credit builder loans and the ways you have been impacted. If you had to give them one piece of advice, what would it be?
One piece of advice, I would say a big way to make a difference is offering and advertising, most importantly advertising, credit building products, credit building loans, and pairing that up with financial coaching as well. Also, another big thing is having youth and young adults in parts of the decision making when it comes to your bank or credit union policy. So having them actually be a part of it rather than just somebody that's there.
Yeah, that's a great point. I think especially the way you said wording it and marketing it as credit builder loans. I'm going to ask you, Laura, the same question. We're talking to different banks and different community partners, different credit unions. What is some advice that you would give to them?
I would say to remember the impact you can have on youth if you offer non-custodial accounts. In particular, you can allow underprivileged youth to overcome generational poverty and receive opportunities to get on the path to building wealth, thus increasing their quality of life. I would suggest the MyPath Youth Banking Standards as a great guide to create youth accounts.
Great, thank you. I appreciate you both joining today. We're going to keep them on the panel, but we are now switching audience with some of your questions for any of the presenters that we had today on the broadcast. Please remember to type in your questions in the Q&A section of your screen. Thank you again for sharing your stories. They're very moving and powerful. Now I'm going to let Tracy handle the questions from our audience for the entire panel.
Thank you. Norel, the first question for you. Where did you get your financial mentor? How did that relationship come about?
I got my financial mentor through Alex. It was a part of the credit builder program that was going to help me get a credit building product and paired with my financial mentor. So having that together was really helpful to have. So that's how I got it.
And did Norel, did you have a bank or a credit union account with this particular institution that you got your first credit product from?
Yes, it was the same one. I had this account from MyPath when I was actually like 14, 16. So again, going back to having young adults and youth having their own bank accounts.
Great, Laura. Since you obviously know the importance of saving 90% of your paycheck going into a savings account to meet a goal is very impressive. Do you talk to your peers about getting an account at a bank or a credit union, and what's their reaction?
Most of the time I receive envy because most of them are under their parents' accounts, and they often say, oh, we can't do this or that because their parents might overview their transactions, et cetera. So having that fear and having that dependency on their parents is something that I unfortunately didn't experience. So I was able to be the one that say oh, I can lend you guys money, et cetera. Just having that financial privilege is super important to me.
Great. And Norel, you said that you didn't know how to pull a credit report. Is that before you got your first product? Is that information that you share with your peers? And do you tell them? Have you been able to take some of your experiences and perhaps share them with your peers so that they know that it's maybe not as hard as they would have thought?
Yeah, I was able to, because I remember I had a friend that was like, I need to start building my credit, I just don't know how. So even knowing that, there are credit products that are designed to help people build their credit, just having that information and just, again, try to teach people, make sure that you pay everything on time, every time in full. Just all the information that I got from my financial mentor, try to just give it off to my friends. I feel like that's helped them as well on their credit journey. So, yeah.
Fantastic. Now, I see that we're coming up on our time for questions and answers, and we will get back to those who had typed in a question in the Q&A, but at this point, I will turn it back over to Natasha.
Thank you, Tracy, and thank you, panel and presenters. Everyone did a great job emphasizing the need of collaboration amongst trusted community partners to break the poverty cycle. Now, I'm going to introduce another partner of ours, Luke Reynolds, Chief of Outreach and Program Development at the FDIC. He will discuss their commitment to financial education and access to affordable accounts at insured depository institutions. Luke, welcome.
Thank you, Natasha. I would like to thank everyone for joining today's webinar. Whether you're a representative from a workforce entity or a financial institution, your work with youth is important. We hope that what you've learned on today's webinar is helpful to you. The FDIC is committed to expanding inclusion in the financial mainstream. Our work is guided by our Economic Inclusion Strategic Plan, which is divided into 5 opportunities: financial education, insured deposits, access to credit, mortgage credit, and small business. Today, you heard two youth leaders discuss the importance of the first three opportunities. They recognize that financial education is important. Help banks and other organizations meet the financial education needs of their communities. The FDIC developed Money Smart. Money Smart is a free, non-copyrighted financial education program that targets people with low and moderate incomes. You also heard them say that putting what they learn into practice is essential. Through their program, they develop relationships with financial institutions to obtain a deposit account, which is the second opportunity. The FDIC encourages banks to offer low-cost savings and checking accounts. The third opportunity is access to sustainable credit. Norel told us about his first loan. Previously, he was credit invisible, and now he's on his way to a good credit score. He was able to get the loan because he had established a relationship with a financial institution. It's exciting to see young people on their financial inclusion journey. Workforce providers and financial institutions are critical to helping them along that journey by teaching financial education, offering affordable accounts, and providing credit opportunities. The FDIC and Ncua stand ready to support your organization in these efforts. Our agencies will continue to collaborate on efforts to help financial institutions support the needs of their communities. I would like to thank the Ncua and their team for our continued cooperation, and we look forward to continuing to work together to further our financial inclusion goals. Natasha?
Thank you, Luke. The Ncua has some resources not only to help credit unions and their members, but consumers, community partners, and financial mentors. The Ncua's consumer website, mycreditunion.gov, provides timely and practical financial tips, interactive learning tools, financial resources to accompany different various stages of life, like starting a first job, opening a savings or checking account, and consumer loans. MyCreditUnion.gov is also available in Spanish at espanolmycreditunion.gov. The information is presented on the website in multiple formats, including web articles, downloadable brochures, videos, interactive learning tools, and games like our popular Hit the Road game, where a group of young people go on a road trip across the country learning how to manage their money wisely along the way. Also, our credit union locator tool helps consumers, including young people, find a local federally insured credit union in their area. One of our most popular resources on mycreditunion.gov is our interactive information graphic on what a credit union is, and this graphic breaks down in easy-to-understand language the meaning and purpose of cooperative, not-for-profit, and member-owned financial institutions. Credit unions and community partners can link to this site and share these tools. For more resources, be sure to follow us and like us on social media to receive regular updates on consumer financial protection and financial literacy topics. Before I hand it over to Tracy, a quick reminder to credit unions about reporting your financial education services activities through the credit union profile. With every cycle of the call report, credit unions must review and certify their credit union profile. On the profile page, credit unions can indicate whether they offer financial literacy workshops, financial counseling, financial education, in-school branches, and first-time homebuyer programs. This data helps inform the Ncua and other interested stakeholders about the important financial literacy work credit unions are doing and sharing that nationwide. So back over to you, Tracy.
Thanks, Natasha. Luke Reynolds briefly mentioned the FDIC's curriculum for youth and young adults. You can find all of our curriculum at www.fdic.gov/MoneySmart. I also invite you to explore the FDIC's Youth Employment Resource Center at www.fdic.gov/youth-employment. There you will find links to a number of resources, both FDIC resources and those created by others. You'll also find a supplement for anyone that wants to help a youth or any new account holder compare and select an account at an insured financial institution. We recognize that having an account is important. However, having the right account is crucial. The FDIC's Money Smart supplement for instructors and trainers prepares potential trainers to help youth identify and select the most appropriate accounts for themselves. This resource aligns with the FDIC's Safe Account template that Margaret mentioned earlier, and that you will also find on this resource center. You'll find also a conversation starter, ideas for youth employment professionals to help youth access bank accounts as well. This was developed for youth coordinators and others working with youth programs who wish to work with financial institutions. It suggests potential information that financial institutions may wish to know about your program and what information that the workforce practitioners might consider asking the financial institution representative. We also link to the resource that Margaret mentioned earlier. This resource was developed by the Conference of State Bank Supervisors, and it's entitled The Statutory Requirement for Opening Bank Accounts for Minors by State. It provides the state-specific statutory requirements for minor accounts. And again, this can be, there's a link from www.fdic.gov. Other links include the Financial Literacy and Education Commission's resources for youth employment programs and financial institutions to work together to increase youth financial capability. If you're a workforce practitioner and would like to find a list of bank branches in your community, go to www.fdic.gov and enter Bank Find in the search box. Once there, simply enter a city or a zip code to search for branches near you. I also encourage workforce practitioners interested in incorporating financial literacy into your programs to visit the Money Smart Alliance at www.fdic.gov/MoneySmart. You may find a financial institution or a nonprofit partner to teach Money Smart to your participants. So what are the next steps? Consider partnerships between financial institutions and workforce programs. If you have any questions, need assistance finding a partner in your community, whether it's a financial institution for account access or you're looking for a workforce partner, please reach out to either myself or Natasha at tmorris@fdic.gov or in McAdoo, NMCADOO at Ncua.gov. We'll be very happy to help you. Natasha?
Absolutely. Thank you, Tracy. Absolutely. Again, it's all about relationships and collaboration to help this youth and get out of this poverty cycle. With that, this concludes our broadcast. This webinar will be available in approximately 3 weeks at our website, www.ncua.gov, and the closed captions will be available at that time as well. So thank you for joining us and have a good day.